Hello, good evening. Good evening. Silicon Valley Bank. Now, this bank is now bankrupt. I don't know if this website is working. Oh, they still have the website. Proactive guidance for long run. Interesting. What is so interesting is that they haven't updated their website. Yesterday it was not working because I think too many people are trying to access the website, so it was not accessible. But today the website is up and running again, and we see that they haven't updated. Nothing is there about SVP. It's probably because of after Federal Reserve has come up with a statement about bailing out the daters, not the investors. I think that's the reason, probably. I don't know, but whatever the reason, it wasn't working yesterday. The website wasn't working. I tried to access it, but now it does. I think it's important to first go to the about page. Right, not many people would have heard about this bank. This wasn't very popular bank, especially among retail people, unless you have strong interest in startups or venture capital. You wouldn't be interested to knowing what this bank is all about, right? But let's go to about us page and let's see what are the things there. For example, let's look at the senior management, right? So this guy called Greg Becker was the CEO of the company, and let's look at his profile. So Greg has been a champion in the innovation economy since he joined in 1993. Today he is a president CEO. All right, it's the 14th largest bank in the US. I thought it was 16, or probably at the time he joined it was 14th biggest bank. Prior to taking on the SBB president and CEO role in 2011, Greg held a variety of leadership positions, including co-founding SBB Capital, which manages some of the world's top-rated venture funds. What is interesting is that the CEO doesn't have banking experience, or probably he did work. Does he have a LinkedIn profile? I'm not sure though. But he came from venture capital. He was heading a venture capital fund, and then he was made a CEO of a bank. I think that's quite strange to me. Okay, and what is his educational background? He earned a bachelor degree in business from Indiana University. Oh, all right. So nothing is written about his experience in banking. Okay, let's go to the profile of some of the other people. Do they have experience in banking, or do they come from the tech background, venture capital background? All right, so he joined in 2017. He was CFO since then. And he has been responsible for a lot of things, for example, for capital, stress testing, blah blah blah, all these things, right? He's accounting. He has a degree in accounting. All right, but no mention of any banking experience. Very interesting. Well, he did have experience in Wells Fargo and Freddie Mac. He also worked with Deloitte for many years. So okay, so CFO had experience in banking. What about the chief credit officer? Yeah, he also had quite some experience in banking, I think. Yes, Western Bank, Bank of England. Okay, so he was even a regulator. The chief credit officer was uh, with the Bank of New England. Sorry, I thought Bank of England. Bank of England is a regulator, but Bank of New England. Okay, what is Bank of New England? I haven't heard of this bank. So let me see. Oh, there is a bank called Bank of New England. Interesting. So it's a UK based bank, it seems. Okay, interesting. Perfect. Then, okay, there's some diversity. So I see some women also in the top management, executive board, chief human resource officer, chief marketing officer, chief risk officer. And I was told, in fact, I read somewhere that the CRO was missing for over a year. Okay. But I see on the website that they did have a CRO, but I don't know whether she was on leave or yeah, whatever be the thing. Okay. Deep risk management and risk transformation. With 30 years in the financial service industry before joining, Kim served as chief risk officer of SMBC in America and an executive officer in SMBC. SMBC is the Mitsubishi, right? Yeah. It's the Japanese bank. Prior to that, she had senior roles in critical risk management functions in professional service engagements with AIG, Deloitte, Deutsche Bank, Fitch Ratings. She began her career at the Federal Reserve Bank of New York, where over a 10-year period she held a variety of increasingly senior positions in banking supervision, including a 2-year secondment to Basel Secretariat on banking supervision. Yeah, so this she has quite some experience. She has degrees from Harvard University, so he has some credentials. However, she wasn't even there actually. She wasn't there when for last 1 year or so. Okay. All right. What about the board? Who are the people in the board? Okay. So no details about the board, but there are some people, let's say from the government department, former chief executive officer of Barclays. Yeah. So the people from different other banks were also in the part of the board. So it's quite strange why they did not see things to be going in a. So let's look at their expertise and what they used to do actually, right? In the about page probably they will have also, right? So what was the success stories? What have they done over time? They are doing green financing and everything. Okay. So they are doing startup banking, venture funded, corporate banking, private equity. Okay, so the investors are private equity, venture capital, and these things. But what is startup banking? Is it about paying money to startups? SBB is fundamentally different than other banks. While we offer modern banking products desired for tech, life science, and healthcare, that's just the start. Our team of 100 startup banking experts can help you maneuver the fundraising maze, connect with investors, provide candid advice on how to increase the probability of your success. Okay, that's interesting. So they were mainly catering to startups actually. What about venture funding? So they were giving banking services, venture debt, global payment, and foreign exchange. Yeah, so many things. Fraud prevention services. So but they were not into retail banking, were they? I am not sure though. But they are definitely into corporate banking. So large private and public companies trust SPP with their financial needs. So they were, yeah, they were also lending money to big corporations. So in that way, uh, they were a bank actually per se, right? Although they were not a retail bank, they are more of a corporate bank, merchant bank, you can call it. Okay. Some of the recent out reports. Um, okay. Trends impacting private equity. Ratio of dry powder investment. Growth in current hedging activities. Healthcare investments and exits. Healthcare investment and exits. Future of climate. Okay, so they were doing a lot of things actually. They were doing clean tech. They were doing technology related to climate risk, climate and environment, but also healthcare and other things. Okay, they were into good things actually. So they were into business banking, into, okay, SBB asset management. Of course, you will not ask some a bank like SBB to ask manage your asset, right? Simply because they were not very highly regulated, right? They were giving all these services also. Surprising. If you have questions, please let me know. Let's go through the Fed. Oh, nothing on SPP. That's quite strange, right? So there's no announcement yet, but there is some. Okay, so FOMC mark. This is the financial market thing. Okay, that's different. So what it says that mortgage rates could fall because SBP bank collapse is primarily because of the increase in the interest rate, and the bank simply could not survive the demand for paying the interest rate to so many depositors actually. Right. So that's the problem with interest rate. Higher interest rate may be a problem for the banks because they have to pay a lot of interest. but they also make money, right? Through interest. So, but it's expected that the mortgage rate might fall again, which is a good news for many people. By the way, there are two banks that have gone bankrupt. One is the SBP, the other one is the Signature Bank. The value of shares in some banks tumbled around the world after the collapse of the two US banks. How bad is this, and what does it mean for you? Well, there is already a statement, right? Is your money safe? The US government has long granted bank deposit under 2050 US dollar. So that means there is an insurance up to $2050. And if like most people, you probably do not have more than that sitting in the bank account. SBP and Signature had different set of customers. SBP catered largely to startup tech firms, while Signature Bank was a commercial bank focusing on corporate customers. Many of these accounts held amount exceeding, so a lot of money was there actually, so more than 250, and then in that situation you do not get the money back because there is no insurance, right? But action taken over the weekend by the Treasury Department meant every those customers will not lose their money. So that's a good thing. And I think for the UK branch, the HSBC has already bought it, right? Meanwhile, HSBC has stopped to buy SBC UK. I'm bringing relief to UK tech firms who wanted they could do go bust without help. I think that's a good thing. What banks are in trouble? Bank shares in the US, Asia, Europe slumped following the collapse of SBP and Signature Bank as investors fretted about general state of the banking sector. It may not be the case. It's not like Lehman Brothers of 2008 because Lehman Brothers was much bigger bank. Also, many retail customers also impacted back then, and banking system was very complex back then, but not this time around. I think banking system is more localized now compared to back in 2008. Regulations are more strict. Smaller US lenders will particularly hit hard, although they failed Tuesday. The initial sell-off came despite them reassuring customers that they had access to enough cash to be able to protect themselves from shocks. So basically, the small banks are the one who will be in trouble because of the high interest rates, right? Big banks, they have money, they have liquidity, they have capital, and because for the big banks, regulations are also more strict, so it is quite expected. So what industries are hit? Early stage business, yeah, startups will be definitely hit because of this. If they cannot pay their salaries, I think that will be an issue. Are taxpayers funding the rescue? No, that is not the case, right? The US government has clarified on this, also the UK government as well. What does this mean to the interest rate? The Federal Reserve has been aggressively raising interest rate to try and slow down the economy, but raising interest rate would partly to blame to the crisis. Actually, rising interest rate is not the only reason. Yes, that's one of the reason why, because with the high interest rate, banks are having trouble paying interest to the customers, and because of high liquidity need. But it's not the case alone, right? There were other issues. For example, I think they were not properly capitalized also, and liquidity risk assessment wasn't done properly. There was no proper stress testing either. Yeah, so some institutions are speculating that Federal Reserve will stop hiking rates, so there won't be any rate hike in the near future. That's what, at least next 6 months, is less likely to happen because of this issue, right? Okay, that is good. Um, but is there any, let's say, White House statement on this? There is no statement from the White House, at least. No, nothing of that sort. It is quite strange.
Ben jij het type, altijd druk? De Giro helpt je om beleggen zo van je to-do-lijst af te vinken. Met onze ETF...
This, the response from regulators, market volatility, what's going on in this country. We are joined by Dave McCormick. He's the former CEO of Bridgewater, former Republican Senate candidate for Pennsylvania, now the author of a new book. It is out today. It is titled Superpower in Peril, a battle plan to renew America. And we couldn't be more thrilled to have you, especially given what's happening in this country and in the financial world today, because you lived, not just lived through it, but were part of a central actor in 2008 and that financial crisis as somebody working for Hank Paulson at the time in the Treasury. So I'm so curious, as just before we get into it, what you're, as you've been watching this whole thing play out, what you're thinking.
Well, it's a little deja vu all over again, but you think about there's some similarities and there's some profound differences. I think the similarities are that the financial crisis of 2008 was a byproduct of an extended period, in part, of low interest rates. And what we have now is a crisis that's the byproduct of a decade of excess spending and excessively low interest rates.
Right.
And that's creating an asset liability mismatch. And I think Silicon Valley Bank had lots of problems about its management, poor oversight.
Yeah, I think management problem was an issue.
It's an indicator of a much broader set of problems because we've got a real challenge with inflation. The Fed's going to have to wrestle that to the ground, and it's going to create lots of challenges for our economy.
Okay, I want to get to the broader challenges, but I'm curious, as somebody who tactically has seen sort of the different things that the government did back in 2008, and you now see what today's government is doing. Do you think that is this a firewall? Meaning the sort of implied guarantee for deposits of sorts. It's not a full guarantee, but implied. The Fed backstop. What's actually happened with SVB? Do you say, okay, the dominoes have stopped, or are there more dominoes?
Well, two. I mean, you have more expertise on 2008 big picture than I do in many ways because you wrote the book on it. But I've learned, and I think act with caution and humility about what lies ahead. I'm not entirely sure. I look at the response to Silicon Valley Bank, and I wish they would have been able to sell it over the weekend. I think that would have made things much cleaner. I like the fact that management was replaced the way it was. I like the fact that the creditors are going to be challenged. I'm worried about the fact that the uninsured depositors were protected that way. I'm worried for two reasons. One, there's the basic principle of you have the guy who is doing the landscaping outside the building who's now not going to get paid on his outstanding, and you've got the venture capitalist who's going to get paid 100% money good on the deposits. Something seems off with that. Then the second thing, there's $18 trillion of bank deposits. 8 trillion or so are uninsured. So is this a precedent? Is this actually a practical way to do it? So I've got real concerns about it.
It is a precedent, though, right?
Yeah,
it's one that is hard to roll back.
I think so. And listen,
do it
banking.
without causing a serious.
You guys know this well. Banking is about confidence, and I understand the need to create confidence, but we're also creating precedents that are deeply troubling. And you know well that the second and third order consequences of policy isn't always evident until sometime down the road.
Groceries, rent, bills, gas, inflation is really a pain in... Ben jij het type, altijd druk? De Giro helpt je om beleggen zo van je to-do-lijst af te vinken. Met onze ETF...
Thank you, Kelly and Walt. Thank you for joining me. I know you don't speak out very often, but we're going through some pretty extraordinary times in your world right now. Thank you.
Yes, thanks for the invitation. I actually learned last night about 10 p.m. that your network had emailed a staffer in our organization about me coming on yesterday, and unfortunately as I mentioned, I didn't realize that till last evening. Of course, I've been on many times with you before, and so I just want to apologize
contagion after a collapse of a bank in Silicon Valley that did a lot of lending to venture capital firms, but that's what's happened. Your stock is down almost 30% over the past week, including today's bounce. Why?
Well, I think there's been a degree of confusion on two sides.
Aon helps the people and small businesses working hardest to adapt today get the support and protection they'll need tomorrow. Aon is in the business of better decisions.
What have you been advising your portfolio companies in this day alone?
I mean, it's been incredible chaos. So my phone has been blowing up. We have 250 portfolio companies, and I'd say about 30% are involved with SVB. So the first thing we said to them yesterday is we need to stay calm and we need to all get collectively on the same page of what's happening. So in our case, we have 250 portfolio companies. We have another 500 LPs that are also founders. So all of these people we have in our community, and they're really suffering. So in terms of advice, we tend to take an approach of let's share information, and founders need to make their own decisions.
Ultimately, do you have a relationship with Silicon Valley Bank as well at the fund, and what have you decided to do in terms of your own working capital and money that you have with them?
We do. I've had a long-standing relationship with SVB. They've been incredible supporters of the startup ecosystem, and quite frankly, of the emerging managers like us as well. So they've been absolutely critical. We do have a banking relationship with them, and we do keep assets with them. And so it's been a very hard moment. We're trying to help our startups. We're also trying to help ourselves. So just that contrast has been, quite hard.
Jenny, what I keep hearing from conversations with venture capitalists and founders is honestly there's a real concern here, not just about the operational cash needs of startups, but their mental health as well. And I just wondered if you'd reflect on some of the conversations you've had with portfolio founders today and how difficult it's been for them as leaders, as business operators.
I canceled pretty much all of my meetings today just to field calls from founders. This is a very unsettling time. I mean, this is a very hard time in tech, just in general, right? The markets have created a lot of pressure on these companies. Raising capital is not how it was, last year. And so compounding what's happening today, a lot of our companies are really suffering. So we try to be a sounding board. We try to listen. We try to provide resources. But ultimately, it's just a traumatic time.
There was a proposed idea from Sam Altman that actually what founders and startups need right now is cash. Just give cash if you can. Does that make sense to you? Is it a sort of stopgap for what's happening out there in terms of making payroll and working capital?
It really does. I mean, venture capitalists like to run around saying they provide value. Well, this is a time to provide value to your portfolio companies. You need to listen to them, and you need to be able to support them. And many VCs are able to do that or provide resources, right? There are other opportunities for people to kind of come in. But yeah, if you have payroll and you've been, tied up in Silicon Valley Bank, and that money, maybe $250,000 is available on Monday. If you have 50 employees, right, making $150,000, you're in a deficit of about $100,000 just this Monday. So everyone is quite nervous, and I think it is a time to chip in and support our founders.
To that point, Parker Conrad of Rippling, which is in many ways a company that helps with payroll, and they themselves discovered yesterday, of course, the Silicon Valley issue, and the fact that they have their own exposure, and they notified some customers that, look, some payroll processing is going to be stalled because of SVB, even though they did actually switch their banking to JP Morgan in large part. Talk to us about, does this have a cascade effect? Like, what do people do about not being able to make payroll? Do they have to let people go?
I mean, it's a really interesting question. I think that the most important thing is there's open communication, right? We saw in the waves of layoffs, when there isn't good communication with your employees, that's when things really go awry. So have communication. Our founders are speaking to their employees all the time, today, of what's going on and really warning them. And I think that's a great sign of leadership, just being proactive. But yes, there's a real worry that payroll will not be made on Monday.
Jenny, Arjun from Tribe Capital was on the show earlier. He makes the point that there was already a funding deficit